It's all good. Well, hello there. I am Lori Sanella. I am with Blue Crab Realty. I'm a full-time real estate agent in Maryland. And part of my YouTube channel is not only giving helpful hints on buying and selling homes, but also trying to educate people on different ways they have to get support in their endeavors. So I have with me today Geoff Tomasetti from Montgomery Financial Partners, and we're going to get into a little bit why it's important to have a financial advisor walk you through this process and even after the process and that sort of thing. So Geoff, let's start with talk to me about how you got started and what you do.
Thanks, Lori. I appreciate you having me on. Boy, I've been in the business close to 30 years now. It'll be 30 years in a couple of years. So, wow. I got started in the business. I did a co-op program through Northeastern University, and they had put me in touch with a money manager called Colonial Funds back in the day. And this was 1994, 1995. And I was a young college kid. What the heck did I know? I just getting thrown into the workplace. Here, process this, do that, bottom of the ladder stuff. But I found that I liked it and I had an interest in it. We were processing payrolls for 401ks for companies. So, and I started following some of the stock market stocks in the newspaper and mutual funds. And the next thing you know, I started talking to other advisors who would call in and ask for advice for our products. So when I started designing more and more mutual fund portfolios and other solutions for income for their clients, I said, hey, I could do this. I could do this on my own. This is a need. A lot of these guys need help, and I understand how it works. So fast forward 20 years, here I am, managing close to 80 million in assets for folks that are trying to lead a comfortable and smooth retirement.
Wonderful. Wow, that's quite a story. It's funny how we start off thinking we're going to do one thing in life and realize we have gifts elsewhere and move into it that way. That's awesome.
Yeah.
So let's start with the basics. Why is it important for someone to have a financial advisor to work with? And obviously, folks that have, what the world deems as a lot of money, they usually have one. Those of us who don't have quite as much as everyone else, or have more of an average amount, maybe, don't always understand the need for that. So can you explain that a little bit?
Yeah. So here's my importance for most folks. When I initially sit down with folks, we do a consultation piece, and that consultation piece enables me to kind of develop a strategy and build a balance sheet from the client standpoint of view. So we look at things like cash on hand, short-term, intermediate term, and longer term assets, maybe like IRAs. But on the other side of the balance sheet, we also look at the debt. And if there's credit card debt, if there's no mortgage or a mortgage, or someone saying, hey, Geoff, we want to possibly look at or entertain the thought of buying a home in a couple of years. The value that I can bring to them is, once we uncover what their balance sheet looks like, how much they have in cash or retirement assets, how much debt they have, meaning credit card debt, it could be car loans, could be a mortgage, then I can kind of go in with cash flow analysis and make them realize, okay, what's affordable to you, what's not affordable, what's more realistic, a type of purchase for you for the home. These are the types of questions that I can really help guide them so they don't make any big mistakes and get in over their head by maybe accumulating too much debt at the very beginning of the process.
Okay, wonderful. Excuse me. So you're not just looking to manage dollars they have on hand, you're actually looking to come up with a complete plan for them. Roadmaps.
Yeah, and there are some cases where my clients will pay me just to do budget analysis for them. And that entails, again, building a relationship and a balance sheet to kind of get an understanding of cash flow for them and what type of financial decisions they should be making going forward, whether it's buying a home or first-time home buyer or adding an addition or possibly refinancing an existing home. Sometimes we find that people have a mortgage rate that's quite high from 15, 20 years ago or 10 years ago, that interest rates were much different. And I'll put them in touch with a mortgage lender, and they'll refinance, possibly take some cash out, and reduce their overall interest rate to reduce their cash flow out, so they have more money staying in their pockets. So the other area is for first-time home buyers. It's very important for them to understand cash flow generation, what their budgets are, and really I'm there as more of a coach, if you will. To I give them the parameters of what was safe to acquire for debt for a first-time home or a second home perhaps, or a vacation home, and that gives them some real comfortability knowing that there's someone with some experience, doing this for them to kind of guide them so they don't misstep.
Definitely. I know there was, trying to think, when my kids were little, I think it was my third home I was purchasing. And what the bank told us we qualified for, we wouldn't have been able to feed the kids. And I know the pendulum has swung back the other way, and it's more stringent now, but it's just, what an entity is telling you is so different from a person who sits down and actually walks you through everything.
Of course, and that leads to another great point, Lori, is that my allegiance is to my clients. The bank allegiance is for the bank, and I'm not trying to say all banks are evil, but what I am getting at is I'm self-employed. I hang my own shingle from my house. I don't have to hit sales goals or be pressured by any corporate mandate to sell a particular type of product. My reputation is what makes me valuable. So if I'm giving the client correct information and objective information, the guess is, and the hope is, that they come back for more advice and they also refer. So my goal is to just give correct and accurate advice. It's that simple.
Fantastic. Well, now that we're in the age of, all the online, everything under the sun, what is the difference between someone who, what is the difference in, I'm not asking the question well, what is the service you provide over like an ETrade?
Yeah, so that's a great question. Thanks for letting me compare the two. The difference between an ETrade or someone like Geoff, who is also called independent advisor. An ETrade platform person is more of a do-it-yourselfer. They're more of the type of person who says, I'm going to be hands-on myself, and I want to create my own portfolio. I want to pick and choose my stocks or ETFs, and really they're in the driver's seat to make decisions. They're probably more comfortable with their decision-making process than most people I deal with. Most of the folks that come to Geoff aren't E-traders. They don't typically have the confidence, even though they may have the knowledge, they may not know everything about the retirement world. And by no means am I claiming that I know everything about the retirement world, but when you do this for 30 years, you can understand pitfalls and avoid potholes. And most people say, Geoff, you're the expert. Just don't lose money. I want to make money. I don't need to beat the market, but I want to make smart, wise decisions. And that's really what I do, is I hold folks' hands with retirement planning, with whatever purchases they may need. I'm there to hold their hand and say, hey, watch out for this, watch out for that. What are your thoughts on this? And basically, at the end of the day, that provides a comfort for them, that they know that I'm in their back pocket fighting for them and planning correctly for them.
All righty. But if you have someone who has been doing like the E-Trade thing, but is wants to talk about, maybe it would be nice to have a little bit of help, they still have final say on where things get invested and that sort of thing, correct?
Yeah, that's a great point too. Yeah, E-Trade they have final. The person hiring E-Trade is really in control. I mean, that's what it is. And on our side, if they were to hire Geoff, I'm like that coach. Of course, the client has the final say, but I think the main difference would be is maybe if they're just utilizing the E-Trade platform and the tools, there may not be somebody there in their ear saying, hey, this could be a big mistake if you don't watch out for this. That's a major difference.
Right. That was that. Yeah, that was kind of the point I was getting at, is that
Right.
I would still have final control if I'm working with you, or final say if I'm working with you.
Correct.
I just have someone who is spending their, 8, 9 hours a day watching and tracking the market versus me who's off doing whatever. And then I do it for 30 minutes at night.
Correct. You're doing what you're the expert in, and then I'm doing what I'm the expert in.
Exactly. Exactly. Alrighty, so back to like the homeowner thing. Somebody gets in their house and they're comfortable with their payment, cash flow is good, all that. How do you continue to support someone or a family or a couple like through their life as an advisor?
Yeah, we most of my practices is leaning more towards people already in retirement, but
Oh,
we do have some of the folks that are earlier in their careers, ages like 30 plus. We do guide them through, and most of our clients have been with us for 15, 20, 25 years. That's how long I've been in the business. We
wow.
do guide them up to and through retirement. So up to could be age, we have clients that are grandkids that have a brokerage account with some money in it that we guide monies in, and all the way up to age 65. But if you're not retired and you're still working, we usually do reviews. And generally speaking, with those reviews, it comes again with updating that balance sheet. And Lori, what we usually try to find out is if there's any significant changes in their lifestyle, meaning has there been any change to salary? Have you got an increase? Did you lose your job perhaps? There's a lot of different mechanisms that can change the economic environment for a family. So we try to make sure we're up to speed on any significant changes. And then we can adapt the plan to that specific change. Sometimes there's no change. Sometimes things are status quo, and that's usually a good sign. But sometimes you can't help the inevitable. People lose their jobs. They have to cut back on spending, and we can kind of help them show what they could cut back on if they want. Um, Vice versa, if they get an increase and they have a better salary job, we can help people decide where to put more money into retirement or where to put more money where they can build their wealth. So it's an ongoing fluid situation, but we do try to review the cash flow every year.
Oh, I was getting ready to ask that. Assuming someone's just kind of going status quo and nothing big's happening, how often? So
About
annually?
annually, yeah. And most folks will reach out to us if there's a significant change that we need to know about. If for example, Lori, and you had hired us and you had lost your job maybe 3 months ago, but we were going to meet in December, you probably would have called like most folks do immediately after you've lost your job and said, hey, Geoff, we've had some significant changes. We need to adapt our plan. Help us.
Understood, understood. Wonderful. All righty. Is there anything you can think of that I haven't asked or haven't brought up that you feel is important to share?
Yeah, there's one thing I'd like to educate the consumer on, and that's, I say, do your research. If you're looking to hire an advisor, look at the track record. Go back. You can go to sec.gov and actually type in the representative's name to find out the past of this person who you're trying to hire. Also, ask about fees. Fees should be very transparent. We're very transparent with our firm. We're mostly fee-based. We don't hide anything, and I'm not suggesting other folks do, but those are the two big things I would look at if you're looking for an advisor is check out the person, he or she, online at through sec.gov, and then fees are another big opportunity to kind of find out what it is they charge.
Actually, you that's a really good thing to bring up that I didn't think about bringing up is the fees. So how do the fees work? How do you get paid
Yeah,
from this?
there's a couple of ways advisors get paid.
Mhm.
One is a commission based. Sometimes there's a strategy that you could offer to a client where if they deposit monies with an insurance company or money manager, there's a commission that's paid by the money manager to the advisor. Now the advisor doesn't get all of it; they'll get a piece of it. But we don't operate entirely that way. That's a very, very small percentage of our business. About 95% of my business is run through fee-based. So what that means is that a client hires us to manage their assets, whether it's retirement assets or just assets they have outside of 401k or an IRA. There's an asset fee tied to the amount of assets that you deliver. So if a client deposits money, we charge generally about 1% on average, and then that fee schedule will drop the more money that's placed into the account. And it's the nice thing is that it's transparent. The fee comes directly out of the account. You don't have to write a check. We do have some people that pay via credit card, but most of the people pay right out of their account, and it's pretty seamless, and they see it. So there's no questions.
So it shows in their account or on their monthly statements or quarterly statements or
Absolutely.
however often things come out. Okay.
Absolutely.
Wonderful, wonderful. So it's advantageous to you and your clients for their assets to go up.
Of course, and that's what makes a fee-based advisor unique, is that we do better when the client does better. We still get paid in down markets, but our pay gets cut because the account values generally go down in a bear market. So yeah, we're tied to the performance of the account.
Wonderful, wonderful. All righty. I am out of questions. Anything else on your end?
No, hey, thank you for having me. It's been a pleasure speaking with you. I look forward to doing this again.
It has been wonderful. Thank you so much. Thank you all for tuning in. Again, I'm Lori Cianella with Blue Crab Realty. This is helpful home buying and selling tips. Please like this if you've enjoyed this, comment if you have anything to say or a question, and definitely subscribe. Thanks for stopping by.
Bye now.